The IRS is watching your side hustle. Yes, even that small amount you think won't matter. And guess what? They're cracking down hard right now, using tech to spot even the tiniest mismatches. You think your hobby income is too small to catch their eye? Think again. This isn't just about tax season drama. It's about avoiding a letter from the IRS that could turn your life upside down. Stick with me because I'm going to reveal the mistakes you're making and how to avoid the trap before it's too late. You'll want to hear this, trust me. So, what exactly is side hustle income? It's not just a side job or a part-time gig. It's any money you make outside your regular W-2 paycheck. We're talking about everything: Uber, Lyft, DoorDash, selling stuff on eBay, Etsy, or Facebook Marketplace, freelancing work like design, editing, or coding. Heck, even if you're getting paid for your YouTube or TikTok content. If you're making cash through PayPal, Venmo, or Zelle, that counts too. Even if it's just for fun, occasional, or seasonal. The IRS expects you to report it all, no exceptions. Now, why is the IRS suddenly all over this? It's simple. Technology. Platforms track transactions, payment processors create records, and banks monitor deposits. The IRS now uses a matching strategy: your reported income versus what third parties report. When those numbers don't match, an automated system flags it. And here's where things get dangerous. A mismatch could trigger an IRS letter, even if you think it's too small to matter. Here's the biggest mistake people make, thinking that small side hustle income won't matter. They think, I only made a little bit. No one will notice. That's where you're wrong. If you made $2,200 from a side gig and you didn't report it, guess what? The IRS will notice. Why? Because they'll get a 1099 form reporting that amount. Your tax return showing zero income won't match up. Boom, mismatch. And that's when the IRS comes knocking. This isn't about how much you made. It's about the fact that you didn't report it. The IRS doesn't care if you made no profit after expenses. They see $2,200 and want taxes on it. The lesson: report your income properly. Don't wait until the IRS sends you that letter, forcing you to explain why you didn't report a penny. Trust me, it's a headache you want to avoid. Now let's talk about how quickly this situation escalates. You think you're safe, but you're not. The IRS doesn't need to manually go through every return. They have automation for that. A computer system will scan your return, compare it to third-party records, and flag mismatches. It's that fast. And when they flag you, it's not just a quick phone call to clear things up. It's a full-blown investigation. Compare this to a few years ago. People could slip under the radar. Now, the system has caught up. Small, irregular transactions are immediately on their radar. And here's where it gets even worse. This kind of thing is becoming more common. The normalization of this process means that more people are getting caught, and it's not just big amounts. It's the small, seemingly innocent side hustle that's getting people into trouble. So what happens next? The IRS doesn't just send you a slap on the wrist letter. They'll dig deeper. They'll demand proof of every dollar you earned, and they'll expect it to be reported accurately. The moment you mess up, they've got you. Here's where it gets even more disturbing. The IRS doesn't care about your excuses. A common defense I hear is, I didn't get a 1099, so I thought I didn't need to report it. Wrong. The IRS doesn't care if the form never came in the mail. It's your job to report the income, period. The system doesn't forgive simple mistakes like this. And here's the kicker. If you didn't report that income, they'll assume it's untaxed and demand a chunk of your earnings, taxes on the full amount. Think about this. You earned $6,000 from your side hustle, and you've got $4,000 in legitimate expenses. Your taxable income should be just $2,000. But if you don't report it, the IRS sees the full $6,000 as income. That's $1,500 in taxes instead of just $500. And now you have to go back, prove your expenses, and fight for that $1,000 difference. It's not just a simple fix. It's months of stress, waiting for resolution, and possibly hiring an accountant. And that's a hassle no one should go through. Now let's stack some of the most common mistakes that put you in the IRS's crosshairs. First, there's the issue of mismatches. If you report report one thing, but third parties report something else, you're already flagged. Then there are the big deposits that don't match your reported income. Suddenly, you've got cash flowing in that doesn't line up with your tax return. You're asking for trouble. But it doesn't stop there. What if your side hustle shows huge expenses, but tiny revenue? That's a red flag too. The IRS will start asking questions. And when your income swings wildly year to year, one year you make a ton, the next year almost nothing, yeah, that gets noticed too. If you're juggling multiple platforms and neglect to report the activity, they'll catch on. The system has become so sophisticated that any discrepancy, no matter how small, will catch the IRS's attention. And once you're on their radar, it's not just a warning, it's a full investigation that could drag on for months. So ask yourself, what happens if this continues? So what does this mean for you, the everyday person? If you're like most, a side hustle is a way to make some extra cash, whether it's a few $100 or a few thousand. But when the IRS comes knocking, it's not just about numbers on a form, it's about your life. Imagine getting that IRS letter. You thought your small side gig was harmless, but now you're looking at a pile of paperwork, wasted time, and a hefty tax bill that you didn't see coming. This isn't just a theoretical scenario. It happens to people every day. When you're juggling your regular job and a side hustle, it's easy to miss something or to get complacent. But when the IRS comes in, they don't care about your busy schedule or your good intentions. They want the money they believe you owe, and they don't care how long it takes to get it. If you've ever had that sinking feeling in your stomach when you realize you've made a mistake on your taxes, imagine that multiplied by 100. That's the stress people face when they get a letter from the IRS. The longer you wait to get organized, the more it'll haunt you. Now let's step back and look at how all of this happens. It's not just about you or your small side hustle. This is a system, a well-oiled machine that's built to catch discrepancies. The IRS isn't just randomly auditing people. It's a cold, automated process. Technology does the heavy lifting now. Every platform tracks transactions. Every payment processor keeps records. Every bank monitors deposits. The IRS has access to all of it. And here's the unsettling part. It's not just about collecting taxes. It's about the system's efficiency. The system can spot patterns and mismatches faster than ever before, and it's all automated. It's cheaper and easier than ever for the IRS to send out millions of letters every year. It's not personal, it's just business. And that's what makes it so dangerous. This system doesn't care about your circumstances. It doesn't care if you made a small mistake. If the numbers don't add up, it flags you. And that's the beginning of a long, stressful journey you don't want to go through. So where does this all lead? Let's imagine two paths. On one hand, you've got the path of doing nothing, ignoring your side hustle income, thinking it's too small to matter. Maybe you get away with it for a while. But eventually, the IRS will catch up with you. When they do, the process won't just be uncomfortable, it'll be costly. Penalties, interest, and a pile of paperwork will follow. You'll face stress and frustration, wondering why you didn't take action sooner. On the other hand, there's the path where you stay organized. You track your income and expenses properly. You separate business and personal finances, and you report everything, even if it's a small amount. You stay ahead of the system, and the IRS never has a reason to flag you. The outcome here is clear. You stay in control. You stay stress-free, but the choice is yours. Here's the thing. As side hustles grow, the IRS is only getting better at catching these mismatches. So whether you're on the first path or the second, you'll need to make a decision soon. What happens next depends entirely on how seriously you take this now. Here's the bottom line. The IRS wants their money. It doesn't matter if it's a small side hustle or a full-blown business. If you're not organized, if you're not reporting properly, you're opening yourself up to stress, penalties, and months of headaches. But here's the key takeaway. If you stay ahead of the system, you're in control. Track your income, separate your finances, and report accurately. It's that simple. But here's the twist. This issue isn't going away. As side hustles continue to rise, the IRS is only getting better at catching the small stuff. The next move is already forming. Will you be ready when it comes? If you want to stay ahead of the game and avoid the nightmare of an IRS audit, make sure to subscribe for more tips. You don't want to miss the next update, trust me. It's only going to get more critical from here. Stay organized, stay informed, and keep your side hustle in check.